Hello and welcome to another exciting episode of NSE FinWiz Season 6 powered by CNBC TV 18. I'm your host Gautam Srinivasan, and as always, we are here to help you make sound financial decisions with the right kind of financial planning. Today we are at the facility of India's leading storage battery manufacturer Exide to help them with their financial planning. So let's dive right in.
For more than 6 decades, Exide Industries has been one of India's most reliable battery brands, enjoying an unrivaled reputation with significant recall value. Exide is also known to be the leader in the packaged power technologies with its constant emphasis on innovation along with a geographical footprint. The brand has also become a front-runner in the lead-acid storage battery space for both automotive and industry applications. This week, NSE FinWiz is at the Exide campus in Pune to engage with young minds assembled on the theme Invest in Yourself, Your Path to Prosperity.
Financial literacy is an ability or a skill. That is how you can manage, how you can plan, invest your financial resources. It's basically an effective decision making. It not only implies to an organization but also to all individuals irrespective of the ages, groups or community.
For young employees to save, because the way inflation is going up, and when you are young you don't have liabilities and you have a lot of money to invest, and if you invest in the right age, then in future you will always have a better life.
To my age, ranging over 25 to 30, we have limited liabilities over us. So it is very important to have financial literacy, to think of a broader aspect, to thinking of returns over longer period of time.
Welcome to NSE FinWiz Season 6 powered by CNBC TV 18. The theme, of course, is investing in yourself, your path to prosperity. And our journey towards generating financial planning awareness now takes us to the Exide Industries facility here in Pune, where a lot of eager folks are here to ask their questions on financial planning. And of course, to answer them, we have with us two financial planning experts. Let me quickly introduce you to them, Harsh Rungta and of course, Firoz Aziz. Gentlemen, thank you so much for joining us, and thank you to the audience for being here as well. All right, let's start things off. The philosophy of investing. What should the philosophy of investing be for someone who's just starting out, or for those who are looking to invest but have been advanced in years? What's your opinion, Harsh?
I think investment philosophy basically is really two things, right? Discipline and determination. There's nothing that's going to happen in 6 months or a year or 2 years, So whenever you do investments, always do goal-based investments. Find out why you want to invest. What are you going to do with that money? And when you do that, automatically a lot of things will fall into place.
That's a fair point. Firoz, so in terms of investing, when people ask this question of, okay, how much portion of my funds should I look at long-term investment and how much portion of my funds should I look at short-term investments? What would you say to a question like that?
You have to understand there are two important risks. One is volatility, market का उतार चढ़ाव. दूसरा risk है inflation. So short term में volatility is a bigger risk, and in the long run inflation is a bigger risk. So use instruments like debt, deposits, gold for the short run. If you have the long run where महंगाई is going to be the key determinant of your future, then you have to use two assets to beat महंगाई. One is equity, the other is real estate. Be clear that महंगाई को मात देना है, so these are the only two choices you have. So in the short run, use safer assets, deposits and gold. In the long run, have adequate quantum in these two assets who have shown potential of beating inflation for 20, 30, 40 years.
And Harsh, a lot of people have a lot of savings. And then they arrive at the question, what do I do? They also have debts. So their question is, should I first pay off the debt, then get on the investment journey? Or what should I do? What would you say to them?
I have this concept of good loan and bad loan, right? A good loan, what is a good loan? So a good loan has to satisfy two parameters. I call it the AAA principle, right? First, a good loan should either add to your asset or it should add to your income. One of the two it should do. And second, it should be appropriate. So let's talk of an education loan. I mean, there are quite a few young people here. An education loan adds to your income because when you get educated, it improves your skill levels and therefore it adds to your income in the long run. So it satisfies the first leg, right? Appropriate is like this. Suppose you're going to take a degree in Harvard and that's going to cost you 2 crores. And your estimate is that that's going to add 5,000 rupees per month salary increase from where you are. So even though the degree is from Harvard, that may not be appropriate for you, right? So as long as the debt is good, okay, and you can add one more thing, as long as the cost of that debt is lower than the return that you can get from an investment. That typically happens in an education loan and a home loan. Because of the tax deduction, the interest cost reduces.
All right.
So therefore, those kind of loans, they are good loans to start with as long as they are appropriate and they come at a low cost. So those can exist, coexist with building prosperity. Or building your wealth or whatever it is, or going towards your goals. Anything else, you might be better off investing for them. So invest for a car and buy it with your own money rather than take a car loan.
I guess on that note, we'll take a very short break. We've been talking about investing in yourself and your path to prosperity. In the next segment, we'll be looking at investing in the digital age. Stay tuned to CNBC TV 18. Dive right into the topic of the episode, which is investing in the digital age. Now, in your opinion, how is the digital age changing investing? Firoz, what's your view on this?
See, I think digital age so far has only focused on convenience of investing. Now it's very easy to invest. Before you invest, opening a separate bank account has become just a couple of minutes affair. So digitization has improved convenience significantly, point one. Second is digitization has made information flow far, far more faster and more appropriate. That's second. The third thing, which I think will be the next leg of using technology, will be for artificial intelligence to produce advice. Because if you're in the business of mathematics, there is a lot of data crunching, which throws up some degree of better crystal ball gazing than humans can. So I think as we stand today, convenience is a very big, important element. So physical assets will actually take a back seat in this new age. And I think capital assets or capital market assets will take a front seat.
How many of you track your funds through these online portals? I see 1, 2, 3. Okay. So base of people are but for those who are not experienced this, could you take them through that journey? As in, they visit a financial planner, they'll get a risk profile analysis done, and then a financial planner suggests that these are the kind of funds you can invest in and this is the proportion you should do. How do they keep track of the performance of their funds?
If you are investing towards a goal, right, then clearly what happens on a day-to-day basis makes no difference at all. Okay, I'm saying this with a huge sense of responsibility. In fact, looking at it every day, okay, is injurious to your financial health. Don't look at it every day. We should definitely review it. And what do you review? You don't review your investments. You review your journey towards your goal. Okay, this was your goal. Is it still your goal? Has that number changed? My existing investments that I have done, combined with the investment that I will continue to do, assuming a certain rate of return, will I reach this goal? Do I need to increase? Do I need to decrease? But that you can't do daily. Okay? I mean, I would not advise you to even do it quarterly. Okay? I think 6 months, a year is best.
Okay. And in terms of this ease of access which this digital age brings to the investors, it's interesting when a lot of people start discussing, themes like Bitcoin and peer-to-peer lending, because they feel that, okay, they heard news or read the news that these have delivered staggering returns. And earlier, while there was this, the rough and pull of going around, getting the forms and signing up, now everything is available at the touch of a button. But when people come across these fringe concepts of Bitcoin investment and peer-to-peer lending, and how should people approach that?
See, I think everything teaches us something. It's about your receptiveness to learn from it and remember it. What is to learn? Point one, don't invest in anything which you don't understand. How many of us in this place understand what is blockchain technology? To the entirety. Suna hoga, ek do article padhe honge, but we don't understand blockchain technology. So don't invest in anything which you don't understand. Second is, generally bubbles are formed when they use, now for example, Bitcoin was a currency, not an asset. Currency और asset में बड़ा अंतर है. Currency से मैं कुछ खरीदता बेचता हूँ. Asset से मैं पैसे कमाता हूँ. Currency was being used as an asset. So please be very careful. Currency का काम currency को करने दो. Asset का काम asset को करने दो.
Let's see what the audience has to ask on this topic of investing in the digital age. So I'll be calling out a few names again. Get up, introduce yourself, and ask the question you've written related to the topic, which is investing in a digital age. The first name I'll call out is Ramdas Uniyathil. If I could request you to get up.
In this today's age of this hacking and this thing, how safe is our digital investments?
What do you say to that?
So I think that's a lovely, lovely little question. Okay. When you didn't have digital, right? Did that mean your money lying in the bank was completely safe? Did we not have frauds then? Obviously, when technologies change, the nature of fraud changes. The way in which the fraud committed is changed, right? But the frauds will always remain. As far as mutual funds, etc. is concerned, okay, it's extremely safe. Simply because mutual funds can only be redeemed into your bank account.
And the next person I'll be calling out is Umesh Bharde.
I just want to ask for the age between 25 to 30 to start investing, what are the options which will give better returns over the period of time like 20 years, 25 years?
If you're a first-time investor, you have to use mutual funds as a platform. When you choose mutual funds and put at least 80% of your money in equity, I think that's the prime requisite. If your age is less than 30 and you're speaking of 20-year time frames, if I gave you some statistics, if you had 1 lakh rupee to invest, if you invested in debt for 20 years, it would become just 6 to 7 times. But if you invested in equity, instead of 1 lakh becoming 7 lakhs, the 1 lakh could have been more than a crore. That's the kind of compounding return which equity can do in the long run.
All right, that's a very clear roadmap for you, Umesh. Thank you so much for asking your question. The floor is, of course, now open to all the members here from Exide to ask their questions on financial planning to our experts here. So let's see a show of hands. Who wants to ask a question to our experts?
My name is Sanjay Babar. How safe to take the advice from this financial advisor?
So I think, of course, there is rampant mis-selling, which is the reality. Okay, but I think the regulator has been very, very vigilant in terms of curbing mis-selling to people. So I think it is getting safer by the day. What could be the precautions? So when you are giving all your information to a financial advisor, why is he or she not duty bound to give you all the information which they have? And then when you see intersecting stuff between your portfolio and your advisor's portfolio, that's a very good method to evaluate. Second is write down 10 principles that I don't want to invest in anything which is illiquid. Is a very good principle. So when you have spent 20 years of investing, should you have not written down 10 learnings? If you write down 10 learnings and then give the advisor that these are my rules of the game, give me advice within this rule. That's the second method of being very safe. So these two methods are good enough to remove all vested interest advice. Third is understand the commission the person is earning for every rupee you're investing.
All right. Can we have the gentleman in the back?
Yeah, myself, Soham Chaudhary. I invested in ULIP. I got a loss of 20,000, to be very frank. And in SIP, you are also promising the same. So how safe is SIP than ULIP? Because ULIP, I have got lesser.
Whether it was a ULIP or whether you are systematically investing, I think you meant equity mutual funds.
Yes.
What were you investing for?
I was investing for, suppose, my marriage.
When was that?
In 2013, say, I started investing in 2009. Right. So in 4 years when I got 20,000 lesser. So that's what I'm asking.
So I think there is learning for us in that question. ULIPs, for people who don't know the full form, it is unit linked insurance plan. And also for the viewers, unit linked insurance plans to my mind, you can live all your life without them in your portfolio. So when those 10 principles I was saying, that was one principle, never club insurance, unit-linked insurance plan. If you would have read the full name, then you know for marriage, I don't need an insurance plan. So we analyzed 1,983 ULIPs plans held for 7 years.
Thank you so much for asking a question. Let's have one more question. The lady here, the middle row.
Is it good if I invest in large cap, good large cap equity, or should I still stick to the equity linked mutual funds?
What are you going to use the money for?
I'm planning to use the money, of course, for the retirement, because a lifestyle that I'm used to.
How long is that away?
Maybe 25 years from now.
So are these political developments that you are talking about, are they going to be happening 23 years from now?
But sir, the equity returns have always been higher than the mutual fund returns, if I'm not wrong.
When you mean direct equity returns?
Direct equity, that's right.
Okay, so direct equity returns obviously will then depend on which equity you pick up. So for every good equity that you pick up, okay, I can pick up an equally bad equity that has made your money down to zero or almost zero, right? So I think whenever you do that, if you're looking at equity, you would need to look at the index. Nifty was launched on 3rd November 1995, right? Now please remember back, to those of you who can remember 1995. We have had wars since then. We have had famines. We have had floods. We have had coalition governments. We had prime ministers changing in 11 months, right? We had doddering governments. We have had all kinds of things. But if you look at the Nifty index, over 10 years, not over short periods, over 10 years, Nifty has always given, okay, depending on whether you did it one time or systematic. If you have done it systematically, any 10-year SIP in the Nifty, pick a date and do 10-year SIPs. The worst thing that could have happened to you was a 6% return. SIP, I'm talking of. 7.5 years already told you if it was a one-time investment, right? That is the worst possible thing that could have happened to you. So I am saying, when you are investing with a 25-year horizon, please do not worry about the May 2019 elections.
Okay. Well, on that note, we'll wrap up this episode. I'd like to thank our guests for sharing their insights on the topic, and of course the wonderful audience here, the employees at Exide, for this exchange of ideas that they had, and of course to the viewers for tuning in. And remember, you can stay updated with us on our website nseffinwiz.com, and we are also on Twitter and Facebook on our handles NSE @NSE FinWiz. So, well, keep watching CNBC TV 18. We'll be back with another episode. Till then, goodbye.
It was a good session, especially about equity and mutual fund, which we learned. So I am planning to invest more on mutual funds and equity. So it was a good session, and we had a good knowledge about this one.
I attended this program. It helped me in terms of investing for my future, and it gave me exposure to equity plans and then mutual fund plans.
Experts who are here, they have cleared all the misconceptions and this thing of the mutual fund risks and all my doubts are clear while attending this session.
I haven't invested a single amount till now, but this event sure has cleared a lot many doubts that I had. It has given me a roadmap. Thanks to Firoz sir, he shared a roadmap which I'll certainly follow. And thanks, I'm really grateful for this event.